Good morning, traders. Welcome to the Game Edge Pre-Market Prep. This is Michael from Game Edge on Wednesday, August 6, 2025. Thanks for joining us this morning. As always, like and subscribe to X or YouTube. You'll be notified when we go live with our content, as well as posting multiple pre-market intraday content, as well as our post-market review video that you should check out. GameEdge.us is where you can find us. Go to our website, fill in the free area for newsletter, provide your email, and then you'll be sent our weekly newsletters every weekend, deep dives, as well as a significant amount of education that would provide for free to anyone that signs up. And there are free courses. This is the Game Edge Fast Pass. Again, that's our flagship education course. And then you have the School of Options, as well as the Mental Side of Trading free course down here, put together from our Game Edge team for free. So make sure you sign up for those. And then come check us out on our Discord. We have a significant trading community of everyone helping traders get up to speed and demystify the Gamma, Vanna charm and delta sides of the SPX option structure that we use for our trading. So let's go ahead and jump right into it. Three pillars here we cover at Game Edge: sentiment, structure, and trend. Obviously, starting with our market trend model. If you've been joining us for any amount of time or new, thanks for joining us this morning. This is based on the tick index. Again, this is buying versus selling in the overall market. The bolded white CT is basically what we look for our intraday instantaneous overall trading. We saw that we were in a weakness and a downtrend last week for quite a few days. And then we saw a nice recovery crossing our shorter term moving averages, which we use for momentum, back to the upside on Monday. And then Tuesday, we continued to the upside with the overall market trend model, while the SPX consolidated sideways. I'll draw your attention up here to the breadth indicator, new highs versus new lows. So a little bit of cautionary stance here, as new highs were not significantly outpacing new lows. And you see on this bounce from our institutional selling days here, where new lows were significantly outpacing new highs, we've really not added a large amount of breadth back to the overall structure. So we'll continue to watch this. We'd like to see those new highs expand away from the new lows. On Monday, we did see some institutional accumulation or buying via this filtered tick. This is plus 1,000, minus 1,000 block orders. And we saw the resulting CT in a linear fashion. Yesterday was just kind of sideways, really hanging around that zero line. So not much institutional or large market participant joining in the overall buying within the SPX or within the overall market. So we'll watch this today. We did have a cumulative tick that was above zero ending the day, but we want to see this plus 1,000, minus 1,000, this filtered cumulative tick really start to take off to the upside, indicating that larger market participants are stepping in and buying more stocks than they are selling. So again, we'll watch this. We're back above our colored ribbon. So our mechanical portfolio turned back on yesterday. We entered positions as well as today. As long as we stay above the colored ribbon, our P2P, which is our P trans to PX mechanical portfolio, which significantly outperforms the buy and hold of Spire SPX. And we've posted multiple educational X streams about that, or X threads. So make sure you check that out, as well as some of our videos. Moving on, the SPXA. So we look at the SPX Options Complex. If you're just joining us, this is obviously the largest, most liquid options complex, where we can look at to get to an understanding of where market participants are positioned. We separate the two, the SPXA, which is the AM settled, versus the SPXP, which is the PM settled. The SPXA, obviously by denoting over here the expiries, do not turn over as rapidly as the SPXP, which we'll cover in a few minutes. Again, these are our cruise ships. These are our larger institutions and larger market participants. They're not positioning for 0DT or weekly. They're positioning for monthly expiries, as you see here. We're call dominated above and below spot price. That just means that we're call net delta dominated above where spot price would be. As we're call dominated, we're in a more positive gamma environment that's dampened volatility and supportive on most pullbacks. Again, the structure continues to repair itself here and stay call dominated via the SPXA. You see this large transition area, 63.45 overhead. That'll be a confluence from areas we're going to discuss on the SPXP here in a few minutes. So again, staying above or getting above the 63.45 area would be bullish, and we'd be looking for 6400, and then obviously speculation can to the upside towards 64.45 and 65.50 via the SPXA. Notice down here the net GEX expiration for the next expiry, which obviously is the August monthly, so we have 21% of the overall GEX expiring. Moving on to the SPXP. These are our speedboats, as you'll denote over here by the expiries in our web app. These can click on and off the tiles, so you can flip through the expiries very quickly and understand if the structure is advancing or declining via overall speculation. We are call dominated above and below spot price, but you'll draw your eye to this significant amount of out of the money puts below us. Again, this is a large amount of out of the money put speculation that we'll discuss here in a few minutes. And then the net GEX is only 3,000 for today. So even though we're coming into the opening call dominated, this is within the floor of noise. So this could definitely be driven to a put dominated structure very rapidly if we see out of the money put speculation come in via our vol metrics, intraday volume metrics that we look at. So we're cautious heading into the day. It looks like we're going to open right around transition. We'll talk about the other transition on the 0DT here in a few minutes. So for below transition, we'd be a little bit more bearish. And again, you see this significant amount of out of the money put speculation here. So again, we could be driven put dominated very rapidly, and that would increase our overall most likely volatility, and then possibly increase the speculation to the downside as we start capturing more of these out of the money puts. Those become in the money. That's more a negative delta going into the complex. Our book gets shorter, dealer book gets longer, and they have to sell the hedge those moves to the downside. So again, we'll continue to watch this at the open and give you any updates. SPXP GEX ratio, again, this is a put call ratio, but we add a time component, which is gamma. You'll notice that even with the consolidation yesterday, GEX ratio still has a negative slope. This is indicating that short-dated put gamma is outpacing call gamma. So kind of what we just discussed there on the out of the money put speculation below spot price. Now we are above 1, which gives that slight edge to the calls and call speculator. That's why we're looking at that call dominated overall structure heading into today. But again, negative slope here. So we have kind of some conflicting tools heading in today, just giving us a little bit cautionary as we head into the overall open. So again, staying above 1 gives us a little bit of edge to the bulls, but if we start dropping below 1, that again will indicate that out of the money put speculation and a short dated put gamma is ruling the overall complex. So we'll continue to watch that. Moving on to the delta balance, this is just indicating speculation separating above and below spot price. So we like to look again, the green line is that out of the money call speculation or in the money puts. So we saw that drop pretty rapidly. You can see this is an interactive chart. So all of our charts at Game Edge are interactive, and you can zoom in and out via just simple clicks. And then you can get the overall integrals as you scroll over these areas. So dropping delta balance there yesterday, or heading into today really, is heading down towards -1. So again, a little bit more cautionary as that out of the money call speculation is degrading or degraded very rapidly, as we were discussing over here. We're seeing negative slopes via that out of the money speculation. And then we saw a short-term relief bounce there on Monday on the in the money calls and out of the money puts, most likely taking some profit as we saw a large move down. And then now we're seeing another negative slope come back in via the left-hand plane, which is below spot price. So that is those out of the money put speculation that I was just discussing. So you see it on the web app, and then you see it across all of our tools for the delta balance. So just multiple ways to visualize what is happening within the overall SPX option structure, as well as how market participants are positioning. So if you're a little bit more visual on this chart or the web app, either one gives us a good idea of what is happening. Now, we do see a relief bounce coming into tomorrow, but then we see a weakness creeping back in very rapidly as we head into Friday. So again, keep this feather in your cap for this information. Now, if we do see this improve, and then we see both of these planes start turning back to the upside and flattening out, a delta balance back towards 1, and then we see projection on out for Friday, delta balance 1, then we'd be a little bit more bullish heading into the end of the week. But right now, we just possibly see a short-term relief bounce and then some weakness coming back in on Friday. So again, we'll watch this positioning day over day. I'm not going to go over our OI tool for today. We did see puts barely outpacing calls on the change day over day for puts. But anyway, just wanted to give an overall look of where we're at within this structure. Moving on, the SPX P0 DTE, we're put dominated as we head into today, 300,000 on the total OI. So a decent amount for a Wednesday. Just get you orientated. The yellow orangish box here is our drunken sailor range. Why is it our drunken sailor range? This is a low exposure area. If you see these net OIs, this will be driven by intraday volumetrics and intraday market participants, so it can be very choppy within this overall range. If you review back to yesterday, we had an excellent game plan. The IC was in place. We had that identified, and then where most likely we'd have some choppiness action, and then difficult areas to get above and areas that we tested below multiple times and provided good opportunities on the short and long side for our members. So heading into the drunken sailor range, this is low exposure area. Again, 6340, 63 area, 6340 area down towards 6300. And then you see the confluence of our transition areas. The blue is the DEX transition. The white thin line is our GEX transition. So again, 6310 to 6330. As of looking at this pre-market, we were within the overall transition with 6315, and we'll go check out our overall trading plan on our TradingView scripts and charts here in just a few minutes. But again, if we're below the drunken sailor range, we'd be most likely risk off. We'll be watching the 6290. That was kind of what we call our wet sponge area from yesterday. That was most likely going to be supportive. That was the lower leg of the IC also, and it was, tested it multiple times and moved back above it, and then closed right around 6,300, which is a key pinning level that we were discussing intraday with our members. So below the drunken sailor range and below 6290, we'll be looking for a move down towards the 6275. This positive net delta area most likely could be supportive as we move down towards there, unless we start capturing a significant amount of these out of the money puts and we see the intraday volume metrics on our call and put centroids moving to the downside as we saw yesterday early on in the day, giving us an idea that most likely we'd see some risk off and move towards the lower legs of those ICs. Now above the overall transition and the drunken sailor range, then obviously we'd be looking for 6350. Confluence of COTMC and PGEX, most likely an area where we'll see some monetization. And then if we're above 6350, we could be driving up towards 6375, 6380. Again, not expecting us to get across this large gradient unless we see the intraday volume metrics and the overall volume that we need to cross these. So we have a net OI, call OI here of 6,000, and then a put OI of 5,000. So we're going to need to see at least 5,000 to 6,000 contracts going in volumetric wise for us to be able to cross this threshold of 6350. And then obviously we'll be watching the transition levels as well as the drunken sailor range and see how we interact within those overall areas. Moving on to net stack command, again, this is highest sensitivity areas. Again, net delta 6290, these are out of the money puts, but you see the right hand plane integral really swamping those out of the money puts on the left hand plane. In the money puts 6325, reference back to where we're at, 6325, 6330, top of that overall transition area, and then right into the top of the drunken sailor range. So this would be that first area as a bounce area that we'd be looking for a possible short area or a stalling area in these in the money puts overhead. And then you see our net charm, the right hand plane out of the money calls are outpacing the left hand plane. 6250 would be supportive via these out of the money puts charm. The out of the money calls at 6350 would continue to be that headwind. So let's go back to that. Again, confluence of the 6350 of those out of the money calls charm as well as COTMC. So again, as we discussed, the net OI is 6,000 here. Call OI is 6,600. We'd have to see 5,000 to 6,000 contracts going in via intraday market participants to get across this overall threshold and level. Not out of the realm of possibilities, but we're anticipating this most likely would be a cap on price, again, unless we see a significant move to the upside. And then to the downside, obviously, you could look up and down the net OI chain and figure out that we could drive pretty rapidly to the downside as we have some lower exposure areas here. Intraday volumetrics, out of the money put speculation could drive us rapidly to the downside if we start losing the bottom of the drunken sailor range again. So net stack command there. All right, let's move on to the trading view chart. This is some scenarios for today, kind of my crude crayon drawing. Well, let's review yesterday. We had a good game plan heading into yesterday. We discussed this overhead area at 63.50 was most likely going to be an area that was difficult to get above. That was tested really early on, right from the open. We had that morning drive, but we were seeing our call centroids that were trending negative to the downside. So there was really no out of the money call speculation to keep us driving price higher. We started to see that rejection, 6 points away from 63.50, but this was going to be a difficult area to get overhead. And then obviously we had the resultant pull down into the lower area of the IC. Our put centroids were going negative, call centroids were negative. So we were seeing this out of the money speculation for puts come in very rapidly. Puts were outpacing calls pretty significantly via our vol-m command. So we saw that drive to the downside. And then we're anticipating this supportive type area into 62.90 and then played out for the rest of the day. So moving on to today, this is kind of our if-then scenarios. If we're opening within overall transition around 63.15, a possible drive to the upside, this would be the first test and a possible area to short, and then a move back down towards the bottom of transition or through transition to the bottom of the drunken sailor range. Second scenario would be to open above transition or drive through transition, go to the top of the drunken sailor range, chop around into that 63.40 area. If we see a rejection, possible move back to the downside. If somehow we do get above the drunken sailor range, obviously that would be a long area, and then we drive up towards that 63.50 area, which is a confluence we've discussed on the web app and the area from yesterday. The other scenario would be opening below transition, drive into the bottom of transition. This is always a good area to watch. If it's difficult to get over, this is a great shorting opportunity, and a move back down towards it to the downside and possibly losing the bottom of drunken sailor range. And then supportive at the bottom of the drunken sailor range could be an overall scenario and wet sponge. If we're not seeing that out of the money put speculation, then the volume we need to drive through the bottom of drunken sailor range, then that could be an overall possibility back to the upside. So again, use our key levels. It'll be vital to look at how our intraday volume is looking, as well as our market trend model, key pillars of sentiment, structure, and trend. And that will give us an idea of where we'll be driven overall with the market wins today, intraday. So that's kind of our game plan for today and our key levels, moving back to our overall 0 DTE, as well as using our net stack command, understanding how these sensitivity levels are mechanical, how they work, and how dealer hedging will continue to work as we see market participants opening and closing contracts intraday. And then here's our 0 DTE game plan for today with our drunken sailor range as well as our transition ranges. So hopefully that helps. Thanks for joining us. We covered a significant amount of content this morning. If anybody has any questions, let me know. I'd be happy to cover any single stocks really quickly. If anybody wants to go over that, I'll hang around for a few minutes. But that's it for today. Again, thanks for joining us. Make sure you check us out on gammaedge.us. That will get you to our webpage to sign up here. And then you can sign up for the free courses as well as the newsletters. And then, as I said, always join us in our Discord, great trading community. So you wanted to check out Meta. Yeah, we can look at that one. All right, we'll cover a few of these really rapidly. So Meta, all expiries turned on, call dominated, PGX at 800, spot prices above transition, so that's bullish. As long as we're staying above transition, you see call speculation to the upside, so that looks good. 770, 780 would be the next area to the upside I'd be watching. Again, supportive type action if you pull down in transition as your call dominated. Let's look at Friday. PGX 800, COI's 800, so definitely call speculation to the upside. Not saying that we would move up towards that 800, but any pullback should be supportive as long as we're staying above transition as well as COTMP. Meta looks fairly good. for speculation. Let's look for next week. So you do see these drop. This is PGX and COI. So you do see the structure drop, but maintains call dominated. So again, any pullback to transition area, as long as the market cooperates, 780 looks like probably the good first target to the upside. So yeah. Yeah, no problem, Reese. Thanks for joining us. Make sure you like and subscribe. Obviously, everybody knows YouTube helps the algos drive our stuff higher, and on everybody's radar. So yeah, thanks, and like and subscribe, retweet. Just get our stuff out there. Again, we have a significant amount of free education. This is free of charge that we put together, spent multiple hours. Just demystifying the overall SPX option structure. So make sure everybody signs up for this. You'll get, other emails from us about newsletters we put out, as well as features on our web app, and just other education that we're producing. We're looking to have possibly coming up a free open mic for not non-members, so it will be open. You'll be able to come and ask any questions with the Game Edge team. Kind of meet us, talk about our philosophy and how we look at the overall SPX option structure and trade the market. So be looking for that to come up. That'll be an open mic where anybody can come join, not just our members. So hopefully we'll be getting that scheduled soon. So, all right, thanks everybody. Thanks for joining us. Everybody make it a great day. We'll hopefully be posting some intraday stuff on X, and then our single stock stuff we'll be posting this morning, most likely, for stocks that are around key areas. Thanks, everybody.